JP Morgan is calling for a gold price as high as $6,000 by the year 2029. And we have record amounts of money flowing into the gold sector. Take a look at this chart. Gold is up almost 28% in 2025, while the dollar is down nearly 9%. The dollar's trading at 3-year lows. That's how tremendous this trend is. I don't remember it ever being so attractive. But the biggest story, in my opinion, is the breakout in mining stocks, as represented by the GDXJ index, which is up nearly 45% in 2025. And the dollar is having a dismal 2025. The world's largest investment banks have some lofty projections for the gold price. We're going to get to that list next. But first, most importantly, thank you for joining me here in the basement. It's a big deal when you give me your time. We love to talk about the precious metals. We love to talk about the mining stocks. I hope you feel like you found a home away from home. Please subscribe to the channel, give the video a thumbs up, and share it with anyone you like. But let's go through this list. It is astounding to hear what the big investment banks are predicting for the gold price as we head into the coming months, quarters, and years. JP Morgan, gold expected to rise towards $4,000 an ounce by Q2 of 2026. Long-term, 2029, potential to reach $6,000 per ounce. Goldman Sachs, gold by mid-2026 expected to reach $4,000 an ounce. That's 1 year from now. Bank of America, gold, 2026 forecast $4,000 per ounce. Are you seeing a trend? Silver 2026 forecast $40 an ounce with potential to outperform gold in 2025. The gold sector is getting a growing level of attention. And as we just saw, there's a lot of potential for much higher prices in physical gold. But is the smart money taking a look at the gold mining stock, the gold developers? I want to tell you about the sponsor of today's video, GoldMining Inc. They trade on the NYSE American with ticker symbol GLDG, but they're trading at approximately the same price today that they were in 2018, when gold price was less than half of what it is today. GLDG is trading near a 5-year low, while gold is hitting new highs. GoldMining owns one of the largest gold and copper gold resource stage mineral portfolios in the Americas. We're talking some dozen projects across 5 countries, located in pro-mining jurisdictions in Canada, USA, Brazil, Colombia, and Peru, with an estimated 12.4 million ounces of gold equivalent in the measured and indicated category and an additional 9.1 million ounces of gold equivalent in the inferred category. GoldMining Inc. doesn't just own resource stage mineral properties, it also has a portfolio of publicly traded equities and cash. GoldMining has grown its portfolio of publicly traded securities to over $150 million, based on the market closing price of those securities on June 12, 2025. This now surpasses the current market cap of the entire company. Let that sink in for a second. GoldMining Inc.'s portfolio of equities, without even talking about its cash and equivalents and its dozens of gold projects, is worth more than the entire market cap. The marketable securities comprise entities from spinouts and an option agreement, including 13% Gold Royalty Corp., 79% U.S. GoldMining Inc., 22% Nev Gold, forming a solid financial foundation, and also an additional $6.8 million of cash and equivalents as of the last reported quarter in financials on February 28, 2025. GoldMining is focused on advancing key projects, such as its São Jorge project in Pará State, Brazil. The company has just initiated the largest exploration program in the history of the company at São Jorge. The future looks bright for GoldMining Inc. And as you can see in this graph, gold stocks have a tremendous gap to close compared with gold spot price, which has soared. One of the biggest challenges facing the gold industry today is reserve replacement. Large mining companies need new discoveries or mergers and acquisitions activity to replace the ounces they're producing. That's where companies like GoldMining Inc. may come into focus. Size, quality, and location matter. The GoldMining Inc. portfolio includes increasingly scarce, large-scale gold and gold-copper projects in mining-friendly jurisdictions. Just what the major operators will need to replenish reserves mined through production. Back in 2010 to 2012, the combined peak market caps of the companies that previously owned the assets in the gold mining portfolio was approximately 850 million Canadian dollars. And that's back when the Canadian dollar was much closer to par with the US dollar. Fast forward to 2025, and gold mining's entire market cap is around 150 million US dollars, despite gold prices climbing from about $1,900 in 2011 to over $3,300 per ounce today. Gold mining has a strong leadership team led by industry experts with decades of experience successfully growing and operating mining companies. Led by co-chairman David Garofalo, ex-Goldcorp CEO, Amir Adnani, a serial success story, and ex-Newmont executives, this team has proven records of success. Insiders collectively own over 10 million shares, or about 5% of the company, as of May 12, 2025. They have real skin in the game. Key shareholders of GoldMining Inc. include Roofer, BlackRock, Sprott, Morgan Stanley, the GDXJ ETF, UBS, and Goldman Sachs, just to name a few. Institutions are all key shareholders. Management and insiders as well as key shareholders all have positions in GLDG. If you're looking at companies with leverage to the gold price and a long-term development strategy, GLDG may be worth a closer look. Check out gold mining, ticker symbol GLDG, and visit goldmining.com. Always do your own research, and thank you, Gold Mining, for sponsoring this video. There's big potential that the US dollar can enter a protracted bear market. We'll be following those developments closely, but that would provide major support, a real tailwind for the precious metals prices. We'll stay on top of it all. Thank you for joining me here in the basement. I'll look forward to seeing you next time.